Good evening. Welcome to part 1 of the video. And the title is Hedge Accounting Disclosures. Rather, KPMG Hedge Accounting Disclosures. I have made one statement many times on the social network. Many times on the social network that the largest fraud in the world is not LIBOR. Rather, as we speak, we do not have a single number that how much benefit the banks and the interdealer brokers got while manipulating the LIBOR. Rather, the hard reality is they are fined fractions of what they earned. So, example, you earned $1, you find 2 cents. Many interbank dealers, including ICAP, RP Martin, they find significantly lesser than what they earned. In the sense, like, I have read many books on LIBOR manipulation. I understand how IRS work. I understand how the interdealer broker works. I understand how principal trading firms (PTF) how they work. I understand how interbank works, and more videos are on the cards. The biggest scandal in the world is not about the LIBOR. Rather, it is about MTM accounting. Now, which, by the way, is mark-to-market accounting. Because trillions of dollars worth of derivative instruments are lying on a regulation which, by the way, helped or which, by the way, is used to revalue these derivatives on a periodic basis, which is monthly. Reporting is done quarterly, that is separate, but the periodicity of revaluation is monthly. Rather, it is daily in case of big banks like Goldman, JP. It is daily because not daily, rather, it is momentarily because they are sitting on a huge book. Like if you talk about Goldman, their derivative book is huge. Now, whether this is a proprietary book or whether this is a non-proprietary book, that's a separate thing. It really matters to them. It hardly matters because they are concerned and on the toes as far as the MTM is concerned, because they need to hedge that. Sometimes they take the delta position, sometimes they take the gamma position, sometimes they take the vega positions, sometimes they take the volga positions, vana positions. So they are concerned, and they should be, because after all the quantum is huge, and God knows, like as we speak, Ukraine, Russia, and any kind of mess can happen. So they are concerned. But revaluation is of two types. And I'm sure that many people even do not know what the hell is revaluation. Forget types of revaluation. Now, one kind of revaluation is which is done using Bloomberg and Reuters. So, example, you have sold dollar yen fixing 6 months 0.30, assuming. And what would if that 6-month rate is 0.35, which means 5 pips higher? Now, suppose you sold 1 billion US dollar. You sold dollar yen fixing quantum 1 billion, 6 months 0.30. Now it is 0.35, 5 bips on 1 billion. It's a huge money. And the bank needs to face because he sold it. And market is high. Now the bank, either it is Goldman, JP, Citi, Morgan Stanley, or any other bank, they're left with two options. Either they can wind this up or they may continue. Now, whether they wind this or they may continue is once again dependent on the fact about their capital and whether this is a this is a proprietary position or a non-proprietary position. Much to speak on that. Much to speak on that, which I would be covering soon. Now, this is one kind of revaluation now, which is done using Reuters and Bloomberg, and that is instantly. Like you have an Excel file, you know that these are your IRS interest rate swap selling positions. You know that these are your IRS buying positions. Now, based upon the market which you are taking from Reuters or Bloomberg, you are valuing yourself. That's how it works. And this is called traders PNL. Now there are two kind of PNL. One is known as the traders PNL, one is known as the desk PNL, one is known as the profit attribution, one is known as the desk attribution. So there are many things we have in the world of banking, but hardly these things comes in public. Hardly these things comes in public. Anyways. And second kind of revaluation is when you revalue for accounting purpose. Now, when you revalue for investor purpose, not all the investor, hardly 1% investors know Reuters, 1% investors know Bloomberg. They have heard about Reuters and Bloomberg, but they haven't seen the IRS curves. They haven't seen the IRS curves. Did they? No. And they're not bothered whether you sold it or you bought it. They're not bothered whether it's a market making or whether this you're taking in your books. They are hardly bothers. And I think they should be, because they want profits. Or in case you are losing, they wanted to know the maximum losses they can bear. For them, the revaluation is done for accounting purpose, which is, by the way, subject to interpretation issue, no doubt, which is subject to interpretation issue. We have FASB, Financial Accounting Standard Board. We have IASB, International Accounting Standard Board, who have their respective, guidelines, US GAAP, IFRS. We have Institute of Chartered Accountant of India, who have INDAS, which is nothing but the copycat of IFRS. But predominantly the world is on IFRS as we speak. But I haven't seen much difference as far as the hedge accounting is concerned in IFRS and US GAAP. Of course, there are few differences, but the level of granularity, I repeat, the level of granularity which I was expecting, it is not there, unfortunately. Now, we have Big Fours. Now, Big Fours include KPMG, Deloitte, PwC, and EY. You open the Google and see till what extent they are corrupt. I repeat, till what extent they are corrupt. It is there on the Google. And they regularly published hedge accounting manuals. Now, this is from KPMG. And this is not a proprietary product. Now, by proprietary, I mean this is not a, of course, this is by KPMG. By proprietary, I mean I have downloaded from their website. This is something, it's not that they have hidden it and they wanted to get it more hidden. So this I have downloaded from their website. So this is the derivative disclosures of KPMG. I have similar of EY and many Big Fours. In 99% cases, these disclosures are unread. Unread means people don't read them. They don't have time, but I do. I love And I always read that. Now, having said that, like I always said, the mark to market, also known as revaluation, is done based on these disclosures, which are full of errors. And I'm going to be letting you know which are full of errors. Now, the biggest question we have, the revaluation of trillions of dollars, I repeat, trillions of dollars worth of asset book and the liability book. Is that correct? In part 2, I'll show you something. In part 2, I will show you something. But having said that, for 99.99% of the investors, for 99.99% of the investors, these hedging manuals are the only thing. And here comes the catch, which I would be telling you in the next parts. Now, this is Rahul Magan from Treasury Consulting Group. You know my personal number, 9899242978. 9899242978.